Assalamualaikum and good day to all. We will continue the second parts of the topics of banking management. We will look at the importance of bank management to help the banking system run more smoothly. The first importance of bank management is changing regulations of bank. Due to Great Depressions occur in the world economy, thousands of banks failed around the world. Millions of depositors had a major dilemma as a result of the bank failure, as they were unable to retrieve their funds. Bank regulation began change to multiply from numerous sides. It is hoped that this will help the better financial management to ensure the continuity of bank operations and achieve the set objectives. The second importance of bank management is increasing competitions due to changing technology developments. Competition is based on the quantity of client service and the quality aspects of services provided. In a competitive environment, the banks that deliver superior services with high quality is likely to be success. Clients can be created regularly by a bank that can attract more customers. More investment and fresh training were required in these technology environments. As a result, the bank's management develops a new banking service strategy that is tailored to the competitive banking industry. The third importance of bank management is changing international relationships. In the international banking industry, whenever a new problem arises, the bank must comply with a large number of legislations. International interactions, whether they are global or bilateral, increase competitions in the banking industry. The bank management follow a plan to integrate banks in the worldwide banking businesses in these periods of the modern science, solutions to the competitive environments and developments of international ties among banks. All these factors stated make bank management more complex and challenging. Okay, now let us look at the problems that arises in the banking management. There are four main problems that bank managers always face in order to achieve the stated banking objective. The four problems that always faced by the bank manager is liquidity management, asset management, liability management, and the last one is capital adequacy management. The first problem is liquidity management. Depending on how liquidity is defined, liquidity management can take one or two forms. One source of liquidity is the capacity to trade an asset as it presents price, such as stocks or bonds. The other definitions of liquidity applies to a large organization such as financial institutions. The second problem called asset management. Asset management is the process of accumulating, managing, and exchanging investment with the potentials to rise in value over time in order to increase total wealth. This is the service that asset management specialists provide for other. Portfolio managers and financial advisors are other terms for them. Many people work for themselves while others work for a bank or other financial institutions. There are two components lies under asset management. The first one is managing the credit risk. That is the practice of mitigating losses by understanding the adequacy of bank capitals and loan loss reserve at any given time. The process that has long been a challenge for financial institutions. This managing credit risk is trying to solving asymmetric information problems by screening, monitoring, and enforcing of restrictive covenants, specialize in lending, establish long-term customer relationship, loan commitment arrangement, collaterals, and compensating balances and credit rationings. All this you can get the more detail in the flipbook provided. The second component, we call it the managing interest rate risk, which is managing interest rate risk is characterized as deciding whether to fix, floats, or accept a set range of probable interest rates. We have discussed this topic of interest rates in the previous topic in more detail. The third problem is liability management. Liability management is the act of controlling the use of assets and cash flow In order to limit the risk of a company losing money if a liability is not paid on time, a method of matching offsetting element that can boost firms' earnings is included in well-managed assets and liabilities. Asset and Liability Management, or we call it ALM, is a practice used by financial institutions to mitigate financial risk resulting from a mismatch of assets and liabilities. This diagram shows the circles of ALMs. The first one is the structures of portfolio, and then followed by the evaluation, revenue or risk, develop strategies, make decisions, monitor result, get data, and calculate the cash flow. And this circle will be always circles to make sure that the liability management will be success. The last problem that always faced by the manager of the banks, we call it capital adequacy management. Capital adequacy management is the process of a bank determining how much capital is needed and then acquiring that capital. The choice of how much capital a bank should have and how it should be accessible is a part of capital adequacy management. Using more capital raises asset earnings and leads to higher returns on equity from the standpoints of the shareholder. From the regulator's perspective, banks should enhance their buffer capital to ensure soundness and safety in the event of earnings fall short of expectations. Those are the 4 problems that are often encountered by the bank manager. By taking into account these 4 issues, bank manager will be more careful and plan to ensure the set goals for the better bank management will be achieved. In conclusions, in order to achieve the goals of financial institutions, the main things that should be emphasized is an understanding of what are the elements, importance, and problems faced by the banking system. From there, we'll be able to identify and control to achieve the set objective. So far, this is the only discussion related to the banking management issue. Hopefully, this video can provide a little knowledge and useful to all. Thank you very much.